honestly, I have a controversial view, and I know people are going to scream. I think dollar that comes into the system should be paid to the arms of government in that currency.
That's not controversial.
Even if the intent of the CBN is to sterilize, if you don't sterilize at the point of creation, you are having this problem because of the way fractional reserve banking works.
They want to only side.
Contrary to what you might believe, I haven't formally studied economics, right? That makes me feel a little bit like an oracle. For me, the priority, number one, is that let's have exchange rate stability. Let's go into a disinflationary cycle. The CBN will start to ease, cost of borrowing will drop, valuations will go up, multiples will expand, and the ease to be able to borrow and fund your investments would improve.
The Oracle Samson's here.
Oracle. That was a tongue-in-cheek conversation.
The Oracle of Edo State.
Hello everyone, welcome to Drinks and Mics, brought to you by Naira Metrics. My name is Ugo Dre, and I have with me my fellow drinkers, Mr. Arnold, and of course, backed by popular device,
The one and only.
the one and only Sam.
Oh, wow. Okay.
Welcome back.
Welcome back.
I'm sure you're all wondering where Tunji is. So Tunji is away, business, trying to make some money, you know. I think he got some good news as well. I'm sure when he's here next week, he's going to tell you all the good news he's gotten. So welcome, guys.
Thank you. I like to say that Samson single-handedly crashed the price of dollar. Notice I didn't say raised the price of dollar. I said crashed the price of dollar.
I can see how you just
single-handedly
left out the Naira in this conversation.
Yeah, we'll talk about that another time. Well, no, welcome back, Samson. Welcome back. It's always a pleasure having you here.
Likewise.
Welcome back.
It's good.
All right, great. Lots to discuss today. Of course, there's a lot of stuff going on globally, and of course in Nigeria. So I hear a lot of you saying you want to hear more of Niger stuff, but we will get into Nigeria. But I mean,
sorry. Before we actually go in, I'd like to make a special announcement. Yesterday was my fellow drinker's birthday.
Who is that?
The one and only, and. I don't know whether to say my older brother, and that might reveal his age.
Well, you don't.
But you can see the age.
I see what's happening now. I see what's happening now. I see what's happening.
To raise a toast to my co-hosts, my partner in crime, Ugo Dre. Happy birthday! Happy birthday!
Thank you, man. Appreciate it, guys. Appreciate. Even the mics wants a part of this. All right, yes, was a year older. But of course, the markets don't really care about age and don't really care about birthdays. They just cares about, money and returns. Yeah. And so we want to start first, Sam. Let's start with the US dollar. We saw some weakening, albeit maybe temporary, over the last few days.
Okay.
Yeah. What's driving that? Is it just a temporal thing, or is it Trump tariff essentially boomeranging back at him? Anything that anyone should be worried about?
So I try and think about, I think the last time I was here, I was talking as to when you talk about tariffs, there seems to be a fixation on the goods current account side of the balance of payment. But on the other side of the current account is your capital account. And the US has ran a capital surplus for as long as it ran a current account deficit. And therein lies what I think is the US power, right? Which is the ability to recycle capital from the rest of the world to fund its own investments, even though the savings rates in the US are quite low. And so when you kind of have, from a posturing perspective, a president who sees straight from a perspective of zero sum, it is no surprise that people have to think hard about recycling their excesses back into the US. So I think that is having an impact. Secondly, the US dollar also tend to weaken when growth in the other parts of the world looks stronger relative to the US. And when I say stronger, it's more from a second derivative perspective, not absolute, because obviously US growth from an absolute perspective is quite strong. So when you look at Europe, for example, consumer, the consumer is in quite healthy shape. And even I think the challenge that they're having on the GDP numbers is really a function of exports. Exports have been underwhelming, right? But European consumer seems to be strong. There is possibly growth outperformance in Europe relative to the US. So that's why if you see the euro dollar, it's in favor of the euros, of the euro. So I think that is also having an impact there. And I also think the US trade was obviously a very crowded trade going into 2025. So there's in order for a crowded trade to remain more crowded, you need to find more buyers, right? And every man.
When you say crowded trade, how do you mean?
Pretty much everybody was on the US exceptionalism bandwagon. In November, December, and all the broker reports that I read was talking about long the US tech stocks.
Yeah.
And I struggled with it a bit because over the last 2 years, obviously the US has been a very, very strong market. So the S&P has returned around 25% a year, despite the earnings growth over that 2-year period being around 20%. So the multiple in the S&P has gone from around 16, 17% to north of 22, 23%. These are cyclical, couple of standard deviation high in terms of valuation. So while the US economic growth outlook is still quite positive, and I think consensus expectation of US earnings is around between 12 to 15% for 2025. I don't think that earnings is strong enough to compensate you for the multiple expansion that the US market has had. So I'm not surprised.
Sam, you sound bearish, man. This is like some.
So
this is a bearish take.
Not bearish from the perspective of I think the US market is going to return massive negative returns unless we have some sort of economic shock. But I do think that the US is looking expensive relative to the rest of the world.
Okay.
Yeah.
I know. I mean, I'm sure you're listening to this and you're saying, I mean, like permutations. Are you looking at maybe like reevaluating your portfolio now, your projections?
So I like to take the other side of Samson's trade. No, but I agree with Samson to a degree. One thing is I'm a macro investor, macro trader by training or by trade, where I act out my views from a macro perspective. And I have views macro, so whether it's a country or a sector, and I try, or whatever it is, and I try to find a way to translate these views. So US being expensive to a point, as a country, as a sovereign, I agree. So I talked last week about being short US treasuries, right? For various reasons. One of the reasons is that I felt treasuries were too US Treasury yields were too low, so it's expensive in that sense. And the Fed, I always felt that when the Fed cuts last year, they cut sooner than they should have. They had inflation wrong.
Really?
Yeah, they had inflation wrong.
I agree. I agree on the.
They cut sooner than expected.
Yeah, then they should have.
They should have.
They got it wrong. Yeah. So inflation numbers came out at 3% for January. I mean, seasonally, January is always a high inflationary month. But this came higher than expected, and it was expected at 2.9. It came out at 3. We spoke about this intensely last week. So as a country, yes, it's expensive. But when it comes to corporates, as a macro trader, macro investor, if I like a stock market, if I like companies in a country, I just look for the index and I buy the index. If I like a sector, if I like the banking sector of a country, I buy the best bank. Yeah. I buy GTCO. Yeah. And then I move on to another sector. So that's how you translate, macro views. If I think the world is in trouble or there's uncertainties, I buy gold, right? So the macro trades have been working where you buy gold, uncertainty. Central banks have been trading out of treasuries and buying gold. So you sort of follow the money on that, right? So follow the Chinese central bank or whatever central banks they are. So that trade has been working. But on the corporate side, it's worked, right? S&P still trades well. So, I mean, Samson, I want to pose that question to you. Where it's expensive relative to whatever your metrics is. You're still seeing some companies are doing well. Right?
No, I don't dispute that, but ultimately I have to look at value relative to the price that I pay for that value, right?
Okay.
So I do agree that US have some really exceptional companies, right?
Yeah.
And you and I both know that you can have good companies that you purchase at the wrong price, right?
Yeah.
And I think when I look at the pace of earnings growth, realized and forecasted, and I compare to the pace of growth in the share price, the share price have outstripped the growth in earnings by a factor of 2.
But isn't this what it's been like
Sorry.
over the last 2-3 years?
Yeah, and
So
I mean, a
that's
lot of people
the
have
thing.
decided,
Also,
like,
I mean,
maybe it's
I want
time
you to repeat what you said because I need to get in. But just also,
Yeah.
everyone's been saying U.S. companies are expensive for a while.
Exactly.
No,
short US stocks.
But then it's
I'm not
guys are
saying
still hitting-
I'm not saying short US stocks. It's a relative value trade for me.
Okay.
I just don't see the relative value argument that US stocks offer significantly more value today.
Value
Right.
or upside?
Well, I would say upside.
Upside,
Right?
okay.
Upside than it. And I agree, like in the last 2-3 years, the US market has been very, very dominant. And also, I mean, to your point on inflation, I'm one of the people that think that the US is in a structurally higher inflation regime, right? And obviously that has an impact on discount rates and should have an impact on how you value these growth companies.
Yeah.
The reason I see that is, remember, post GFC to COVID, the challenge was actually getting inflation up, right? So inflation kind of hovered between 1
They
and
kept
2%,
trying to push, of course,
right?
yeah.
And
Yeah,
you
yeah.
had QE, the multiple iterations of different QEs to try and get inflation up. But if you look at the data, right, in the last 3 years, services inflation, right, has been hovering above 3%. And the disinflationary trend that we've seen in the US has largely been driven by goods inflation,
Yeah.
right? And that is the COVID reopening and the impact that has.
Yeah.
And you had that spike in inflation and a massive deceleration. But goods inflation now seems to have petered out. So it's no longer a drag on the inflation numbers. And services inflation, I think the last read that I saw was about 3.2%, and it's been sticky, right? And that is understandable because the US is close to full employment and the fiscal deficits are quite large, right?
Yeah.
And so when I look at, and it doesn't look like the services inflation is decelerating. Core inflation in the US has been very sticky and very strong. And now the drag on inflation that has been coming from goods and food is ebbing away.
Okay.
Right. So which is one of the reasons why I am in the camp of no rate cuts in 2025 in the US.
So let me ask you. I know we're talking about US and we probably have to move away from US.
Yeah.
No rate cuts this year.
No rate cuts this year. I went from 4 to 2 to 1
unless Trump basically engineers some sort of significant economic
because he wants the
weakness.
cuts, right?
Right.
But I'm slowly walking into that camp where I went from 4. Last year, the broker report said 2 or 3 or 4, and everyone started reducing, and then you had 2. But now it's and I totally agree with Samson. It's I won't be surprised if we see no rate cuts.
Yeah.
But now, what is sort of messing up my micro trades is we all thought that we were going to go into 2025 in a strong dollar environment. So your natural thing to do is look for emerging markets, whether it's shaky emerging markets, and try and take a short position in the currency, whether it's a Brazilian real, which is everyone's favorite, or South African rand, which is one of my favorites. But now you're seeing the rand actually.
I like how you say all of your favorites.
Yeah, you know, it's
Favorite
like
shorts.
favorite shorts. I should
Not
say
shorts
that.
in South African rand. South Africans are watching now like, see this guy, you're shorting us. Hey, God.
But these currencies have shocked me.
It's liquid, it's easily accessible.
It's in and out, I'll say this: it's very hard to make money on shorts. And when I first started trading shorts, South Africa, I made my first money trading. I shorted the rand, and I shorted this South African oil company. Oh, I can't remember the name now.
You guys were in the same boat.
And I remember, like, finally, I'm making money in shorts.
Yeah.
But anyway, these currencies have shocked. They've actually shocked me. if anyone took a short position, you're now trying to figure out what happened.
Yeah.
Is it that gold is trading better because gold has gone up maybe $400 in the past 6-7 weeks from 2006 to 2009 now. It's looking like it's going to cross $3,000.
Yeah.
Gold is a good trade. So you can argue that SA is an exporter of commodities, so the currency is strong, but then Real is strong. The rupee was a bit shaky, it's getting stronger. So these EM currencies is it a commodity play? It doesn't look like a commodity play when I look. It looks like a commodity play when I look at South Africa. But when I look at Real and the peso, those currencies are either stable or strengthening. What do you think is causing this dollar strengthening? Sorry, dollar weakening.
Dollar. I think
That's what you just
I think that's what I just articulated.
Yeah.
I think it's relative growth expectations.
Okay.
As well as.
But don't you guys think this is just temporary? Isn't it too early? To start to think that this weakening is it sounds like it's permanent.
I'm
what
always
is-
very nervous around calling the dollar, right? So I don't want to stick my neck out, right? But at the same time, and that's largely because sometimes the dollar strengthens when the US is doing very well, and then the dollar also strengthens when the US is doing very badly, right? So you have to kind of decide what is going to drive the dollar strength. I see an argument where dollar strength is driven by significant US underperformance. I mean,
an argument where dollar strength is driven by
That sounds
US
counterintuitive.
yeah.
underperformance. Okay.
Yeah. So in a risk-off environment, and that's going to be bad for everyone. In a risk-off environment, dollar tends to strengthen because everybody defaults to risk-free of the risk-free.
Yeah, of course.
Right.
Which is treasuries,
which is treasuries, right?
yeah.
So that I can
So
see
you're
it.
seeing that inflow.
Yeah, I can see a world where that. So to your point, like I can see. So you can have this
But do you
dollar
think the
smile.
concept-
That's what I call it. Dollar smile.
Yeah.
Dollar strength, and then in a Goldilocks scenario, in the middle you have dollar weakness, right? And I think that dollar weakness will largely, historically, tends to be driven by relative growth differentials, as in second derivatives, not absolute levels. So is the rest of the world growth increasing faster than the US growth? Mentally, I think US growth, is likely to decelerate relative to the rest of the world because of how strong US growth have been. And obviously, if you look at China, you look at Japan, you look at Europe, I think there is a very good chance that growth surprise on the upside in the rest of the world. So within that context, I think it's very likely that you might see us at the bottom of the dollar smile instead of at the edges of the strength.
Interesting.
So do you think the risk profile, staying in the US, we're going to move on now quickly. But don't you think the risk perception or the perception of risk for US is changing? Because,
what do you mean?
In a risk-on environment, treasuries normally do well, right?
Treasury
Because of that
yields,
inflow, because of that inflow.
Is it in a global risk environment?
Global risk environment. So globally, everyone runs to the risk-free or the risk-free.
Yes.
Right.
yes.
When they're worried about risk.
Yes.
Right. Which is where we are now. But
Yeah.
but we're not seeing, because if you look at September to this year, treasuries haven't done well.
Yes.
Right.
Yes.
And gold is doing well.
Yes.
So does that mean that the risk perception of US is changing?
I mean, these are difficult questions.
Yeah.
I don't know if you've heard of something called the Mar-a-Lago Accord, right?
Okay.
So this is, remember, like, we've had quite a number of changes to the monetary system over the decades. So you had the Plaza Accord, and you had the Bretton Woods, which are
Bretton Woods,
basically
everyone knows.
hotels
Yeah,
where
yeah,
these
yeah.
things tend to be
Of
held.
course, yeah. And the
So
Bretton Woods is the big one.
I've read from people that seemingly are quite close to the Trump administration talking about creating a new monetary system.
And that's the Mar-a-Lago Accord.
And one of the proposals, the most shocking that I have seen, is the US wants to basically, I don't know if they will succeed, but the plan that I saw wants to basically get the people that have the US security guarantee protection, so NATO members, etc., South Korea, to purchase a 0% long duration bond, right? So a 100-year bond, long duration bond, 0%, because Trump has this view that the US is the global policeman and they don't get paid for it, right?
Yeah.
So it's like, okay, in order for me to continue to be the global policeman, you have to
Give
find
me
a
risk-
bond.
give me risk-free debt.
Give me 0%.
Yeah.
right?
Which actually happens anyway, but let's go on.
In that environment,
Yeah.
I think the rest of the world are going to push properly against the proposal like that. But I mean, coming from people within Trump's orbit and people thinking that is a potential restructuring conversation to be had, right? Makes me worried that if you have significant level of dollar exposure, right, you should really be thinking about how to mitigate some of those risks.
Okay.
So which is why
Yeah, I see that.
I would probably at the margin, because obviously the dollar and the treasury is at the heart of the global financial system, so you can't de-risk.
Yeah.
But at the margin, are you a net seller of US treasuries or are you a net buyer of
the
US
margin,
treasuries?
yeah,
At
yeah,
the margin.
yeah.
And I would bet that I will be a net seller. And hence why you have this sort of weird price moves where in a world where gold is rallying, which tells you that because gold is almost like a barometer for risk perception in the market,
100%,
right?
Yeah.
And so treasury should actually be rallying as well.
But now you're seeing that.
But so I
Then
think
that's what I was
that
trying to say.
there are some
Yes.
technical aspects
Yeah.
there that I suspect is global central banks and people who
Winding
are
up.
naturally buyers of US treasuries that are
Acting
either
out
not
there.
investing at the pace that they used to invest before
Yeah.
or are unwinding some
Yeah,
positions.
I 100% agree. 100%
All right,
agree.
guys,
and then this probably leads into the next
let's-
thing,
yeah, okay.
which is
USU stock.
no. Is this global trade acting out in a Naira, right? The global trade is sell US dollar, right? US dollar getting weaker. Rand is even stronger.
Yeah.
And Real
Emerging
stronger.
market currencies.
EM currencies are
Yeah.
stronger, stable or stronger.
Yeah.
Is this acting out? Is this what's acting out in a Naira? Or
I kind of thought we touched on that last week. You're looking for a new twist. You want to hear Sam's
I'm-
view.
because I looked at it today, right? Sam was like, look at DXY. I looked at DXY. Hold on a minute. I knew it was weak.
What's the XY, by the way?
Oh, sorry. DXY is
Dollar
the
basket. So it's a
Exactly.
weighted
For-
average dollar relative to
Other
baskets
currencies,
of other
currencies.
currencies.
All right,
and
you heard that.
it's a good index to actually see how the dollar's performing.
Yeah.
So if the DXY is down, dollar's weaker. The DXY is up, dollar's stronger.
So is this why the Naira is strengthening?
So the question, the DXY is down about 1.8, 1.9% this year,
Yeah.
which
Naira is
is
about
a big
to
deal.
break that 1.5, floor.
Is it?
So I mean,
Is it? No, it probably will. It probably will.
that makes me feel a little bit like an oracle. Maybe just
I'm still on the other side of the string.
just a
Are you
fluke.
thinking of shorting the Naira anytime soon? I mean, it's a free market, isn't it?
No, but listen, I think one of the things that I think makes me a spectacular investor is I'm happy. I know when I'm wrong. I'm not saying that I'm
I
wrong.
like
right
how you
now.
said spectacular.
I'm
Even
not
when
saying
you're
I'm
wrong.
But listen, I'm
What's this?
I'm speechless. No, but the Oracle Samson's here.
Oracle. That was a tongue-in-cheek conversation.
The Oracle of Edo State. But yeah, I mean, it's a question to ask and it's an analysis to do because
So what's the
in
question?
my view-
Why is Naira strengthening? Is that the question?
yeah, it's Naira strength. So in my view, we were going into a strong dollar environment, right? You had tariffs coming in 25% around the world, 10% in China, whatever it was, from the US. High inflation environment coming in, perhaps a strong dollar environment to follow, despite whatever fiscal deficits the US has. The dollar was always one, right? And the trade was always short Naira, not short Naira, just hedge Naira. But I saw, my view of the Naira was that a lot of the strengthening was intervention rather than global, right? But now when you look at the DXY down almost 2% this year, and we're only 7 weeks into the year, you're seeing DXY is down. And you look at other currencies and hold on a minute, this Naira is not the only strong currency. These other currencies are stronger. So perhaps it might not only be a CBN intervention, it might be a global play on the Naira.
Is the Naira that connected? Like,
Well, the FPI
to the
inflow,
global play?
the foreign portfolio inflow might be what's connecting it. So maybe some of these foreign portfolio guys have that view that some of these foreign portfolio investors have the same view that actually everything going on around the global play is as investors are selling the treasuries, as central banks are moving out of US treasuries into gold, it's causing some sort of weakness on the dollar. So let me take advantage of the cheapest currency
or cheapest currency
in my view.
So you accept Naira is cheap.
Did you notice that? Golf.
With another drink.
Golf. What were you drinking? Which of the whiskeys? Golf.
At least that's
No, wait. So I never said Naira was not cheap.
You didn't?
Did I? Did I say?
You
my
went for a
worry
weekend Naira,
was
didn't you?
what I feel. My worry was that opening up our currency in a state of development where we need to be reforming can be dangerous for the reform. Can cause volatility because if the FPI inflow that's globally connected is what's causing this strengthening, what happens when view changes, but the reform isn't finished, right? So my thing is, okay, the CBN, the central bank is probably trying to kick the can down the road, wait for oil production to increase, wait for oil revenues to make sense, and then the reform's over. But hold on a minute, what happens when dollar starts to strengthen? Yeah, but the fundamentals, we haven't caught up to the fundamentals yet.
What's
that's
the worry with that, though?
Then the FBI leaves, and then we go back to volatile.
No, but what is the alternative? I mean, we didn't extend the conversation when you talked about this concept of being close to reform.
Yeah, I was trying.
And I'm sure, like, you are looking at the great leap forward in China and those kind of environments. And saying,
yes.
But we have to. The first point I want to make is Nigeria is a small, open economy, right?
Okay.
I like that.
Right.
Small, open
Yeah,
economy.
it's a small, open economy.
And it just recently became open, isn't it?
It's always been open, right? Because when you think about it, our major export earnings is determined by a global market, and also it's sold in a currency that we have no control over, right?
So it's open.
So it's a small, open economy. What Arnold is suggesting with the concept of being close to reform, because the only way you could have dealt with your FX illiquidity crisis, right, was to basically shrink the economy much smaller than it's already shrunk, right? Because if you don't get the dollar flows, you need to kill the dollar demand, right? So what Arnold is advocating is an
financial repression,
even deeper,
what we call financial
right?
repression,
even deeper financially repressed environment.
So if you look at some developed,
that's very challenging within the context
politically
of
challenging.
Why would you be calling for that?
Now we've gone into deeper. Okay, I'll let Sam finish.
No, because within the context of, remember, when this administration took over, we've basically gone backwards about 30 years in terms of income per capita. Demanding that income per capita gets crushed even more,
even further.
From an 11 days. Like, we have to remember that
we're basically
human beings we're talking about, right? These are not
Can we talk about one of the most successful historical reforms that has happened in the world? This is China.
Correct.
When China did this, when China reformed, they closed out from the rest of the world. They financially repressed. They did their land reforms.
We've been financially repressing for the last
but
2
not
years.
that kind of financial repression. I'm talking about.
You want more?
But these guys have come out actually successful in showing that actually repression works. Because if you look at if you compare some Southeast Asian countries that haven't really repressed, they've had this what they call it, laissez-faire.
Can I ask a
open
question?
economy? It slowed down the development.
So
look at Indonesia compared that to China.
When you have an economy that is open, when you have your total savings rates that is actually quite low, right? How do you fund development within the context of a closed system? I mean, remember, China's savings rates is very, very high. So you can financially repress yourself and channel those savings towards your own development. Because what you also have was a locked capital account.
Yeah, but what you have here, you have liquidity in the banks. You can actually force the banks to reduce interest rates. You can lower rates. Financial repression also comes with lowering rates. So you can actually borrow money.
I thought you were a capitalist.
That's what I was wondering. I gotta use the word.
I think it's the whiskey making me emotional.
Yeah.
But
I always like when you take whiskey because I gotta see the real Arnold.
No, but there's this side to me that sees a potential in actually the real financial repression. Yes, there's stopping effects from leaving, but if you I don't want to use the word force, but you use the word coerce. Which,
But you know,
the last time you came down with me.
Godwin Emefiele tried to financially repress.
Yes.
he did, but something was off there.
What
Right?
was
He
off?
had the formula wrong. Right?
Why?
Because
The unorthodoxy was that? what
no,
was
but
wrong with
financial. I don't even think financial repression is unorthodox.
I think
It's
there's something we're
it's
all
just
missing
not
here, though.
Western.
So let's
it's
take
not
it.
IMF.
We're also
it's
missing.
not what
We're
the
also
IMF
missing
wants.
capacity, manufacturing capacity, technical know-how. Because if you're financial repressing,
I don't
right?
like that technical know-how where you get a strategic. Okay, now we're
Yeah.
going to.
Yeah,
So
you're.
I want us to take a bit of a step back, right?
Because
Ultimately, policy decisions is about choosing the best outcome from a option
bitter pill.
of bad outcomes, right? Anchoring our FX stability on FPI flows in the short term and also remittance flows, right? Because the termination of remittance transactions into Nigeria has grown significantly over the last 12 months, right? So those are structural. We know there's big remittance trade that happens within the Nigerian corridor, but in the past
Not
system,
captured
where
officially.
it wasn't captured officially because they were like opaque. So in a way, I used to joke with my team that the net dollar position that shows up in the banking system is basically the inverse of those remittance trades that are basically settling dollars offshore, right? So the point I'm trying to make is, so you have those structural remittance growths, right? You have, I think, oil, read counts are up. So you have that structural improvement in read counts. And obviously the pass-through from oil revenues to fiscal revenues and reserve accretion, I think with the removal of subsidy in October should improve. And I also said, like, if you look at our balance of payment adjustment, 9 months last year was $13 billion. That's almost 10% of GDP in massive contraction. And my hesitation was that reserves weren't growing very, very fast, but I suspect it's linked to PMS. And now that PMS is gone, I want to see the Q4 numbers and the Q1 numbers. So you have a world, right, where your growth, your development or your FX stability strategy is anchored in the short term, medium term, and long term. We all agree that in order to permanently solve our FX situation, you need to make sure, right, that your non-oil export revenues, right,
are also growing.
This is on a long term.
So I used to joke with people that if I was fortunate enough to advise policymakers on one matrix that we should track every day, right? I think that is the number of containers that are leaving the shores of Nigeria with goods and services.
Correct. I agree with you.
Right.
Yeah. That's a solid
That's
metric.
a structural way you solve that. But to solve that, there's a lot of supply side factors that you need to solve first, right? So it's a medium to longer term strategy. We can't destroy the economy in the hope that we will eventually solve that, right? We need to sequence our growth. So in my head, when I look at our FX strategy, it's anchored on short-term FPI inflows, driving
which I don't have a problem. But my issue is that FPI connects us globally, because it connects us globally, which leaves us in a volatile state. Because we don't know, we have no control.
So would you rather have volatility, or would you rather have an economy size that is significantly smaller than what it
But it's clear that it
is?
doesn't work, because we live in this cycle of huge booms and huge busts since I started looking at frontier markets.
Yeah.
After 8 years, after 5 years, the cycle starts again. We start again. But so it's not working. How long is this cycle going to last for? Do you understand what I'm trying to say? So FPIs, we've been relying on FPIs.
You can't eliminate economic cycles. What you can do is that you can smooth out the effect that it has, right? So I've always had an issue with Nigeria running dollar pegs, right?
Yeah.
And the reason why is simple. When you have high level of inflation relative to your trade partners, every year that goes forward, your unit labor cost is rising by your inflation number relative to your trade partners. So understandably, your import bill will explode because it makes sense to import relative to producing locally, right? Yeah. So the only way you deal with that on a structural basis is that you need to have a currency that has a weakening bias, right? And I think
to make it attractive,
to ensure that on a real effective exchange rate terms, the currency is not strengthening. Right. And that is why I'm not a big, so I think Naira should be stable and in the short run because we need to re-equilibrate, right? Because I feel like we've undershot equilibrium because of the volatility that we've had. But once we stabilize and we find an equilibrium level, I think the bias in order to ensure that you're able to smooth out that volatility that you talk about is that Naira should have a consistent weakening bias.
Okay.
And I don't think people care a lot whether Naira is strong or Naira is weak. People just want to be able to predict what Naira is going to be.
Okay, now that we're in this FPI zone, let me move into what FPI is like.
We gotta end this soon.
Okay, you know what FPI is like.
We gotta
We're looking at
segue.
capital markets, right? For capital market guys, FPIs are coming in buying portfolio assets, treasury bills and bonds.
Yeah.
We have seen a massive rally. The yield curve is almost flat.
Yeah.
How attracted do we stay to these guys coming in? Because now the 10-year bond that was issued at 22.6% today traded at 19.9% in 2 weeks. So now you've had what we all want, this huge flow of FPIs coming,
And it's coming already.
and now
it's
the rates of the return is now by
Watching
next
down.
week,
So
and we're only 6-7 weeks into the year.
well,
Isn't that good?
I mean,
So what happens in March?
but that's a very linear way to think
I know,
about
but
this,
no,
right?
but it's not because it's a trade cycle, right? And then we have this huge liquidity coming in March that is also going to suppress yields even lower. So now our lovely FPIs, what are they going to do in April, guys? What
But
happens to the
are you
Naira?
looking at that in isolation?
No, but because we are looking at it in isolation, because we're hoping that this FPIs come in, and whilst they're in, we hope that our fundamentals come into play to now take us to that medium term where oil production kicks in, and then the currency, and then all the currency legs, all the currency fundamentals make sense. But it's FPIs that are coming in, I've always been worried about, and I said in our conversation 2 weeks ago, what happens when they leave? It's looking like the reason they came in, they're about to leave. They've made their money on the mark-to-market on the bonds, the mark-to-market on the treasuries, and the mark-to-market on the FX. They've made a killing in 7 weeks. If you were long Naira in January, you at 1,700, and now Naira's at 1,500, you've made money. If you were long Naira and you bought Omo at 30%,
You could have made money for a long Naira.
right? And you bought Omo at 30%, or you bought treasury bills for 9%. Today it's at 17%, 18%. You've made money. Why should I stay here?
But Arnold, you
understand?
you act like FPI is a class of investor. It's not one investor.
But it's
So the quality. So there are some people who took the early risk, right? And understandably should get the early reward, right? There's the super hot money, there's the real money guys, and then there's the FDI flows down the line.
But the real money hasn't come in yet.
But
agree
that's the point. But the real money guys can accept a much lower return if they have confidence that the exchange rate is stable,
Okay.
right?
Exactly.
And the second point I was trying to make with regards to, like I said, I think from a structural balance of payment perspective, Nigeria, right, should be organically dollar generative, right? Because
And that's the point I'm trying to make. That's why your manufacturing capacity is important.
Yeah,
Your ability
yeah.
to produce locally and export. Not necessarily produce for the local market, but produce and export, because that's the organic dollar inflow that you need. Whether it's for you to ramp up crude oil production or to look for some other things to export. But as a country,
there is a lot. I think we underestimate how much structural improvement we've had in the economy, right?
Over what period?
Over the last 12
last
to
2
24
years,
months, right? Unit labor cost in Nigeria is probably one of the cheapest across.
even
the
though it's gone up a bit though.
yeah,
It's
of
gone
course,
up quite substantially.
yeah, of course. But relative to where we started 2 years ago,
Still
there's been huge compression of unit labor costs. That has an impact,
Yeah.
right, in productivity, right, and also sets you up in a way where you actually can see that income per capita in dollar terms for Nigeria would rise. And that's something we haven't seen since probably Jonathan's time,
Okay.
right?
Yeah.
So the point I'm trying to make is, let's not just over anchor on these FPI conversations, which
Exactly.
is critical.
Yeah.
But
Okay.
we should also try and appreciate the structural improvements in the economy that is taking place.
Which should
Yeah.
underpin a lot of
And that will support.
Okay.
So I
It's too-
see there is always
it's very
there's
supportive
always
to me.
risk. There's always risk in policy formation, right?
But if you listen to me, I've just given you I think and I feel and I actually believe that I've actually just shown you why the Naira is about to turn.
Turn to what?
Turn to where?
It's about to turn.
Turn where?
From,
Weaker?
the short-term trade is over. The short-term trade is. Can you see what I'm saying? The short-term trade is over.
I get your
Because
point.
The short-term trading was the
I get your
FBI.
point. I get your point.
And this guy's, in my view.
But there is no sign. Okay, FBI inflows in January was $2.3 billion, right?
Yeah.
I haven't seen.
These are
February
not
numbers.
official
February.
numbers, though. Are these official numbers?
Yeah. Well, yeah.
Official numbers are not out, though, by the way.
For January.
For January,
For
for January, I think our estimate is around
These are
2.3.
estimates,
It's,
yeah.
it's
I wanted to
around
just
two,
clarify
it's
that.
around $2.3 billion dollars. I don't think. I mean, there's been significant reversals yet.
No, not yet.
Right.
Not yet.
I don't think
But-
there's been significant reversals yet. But again, I think we are overplaying this risk, right? That the CBN doesn't have the capacity to supply $2 billion to people who want to sell.
I mean, we've seen
In a
reserves
way-
go down already.
In a way,
Yeah.
again. So reserves have gone down, but CBN has been a very active participant in the market, which is
yeah.
understandable because I think I
still a nascent
articulated
market anyway.
I articulated why the market just can absorb the size of the dollar inflows that we were attracting. So CBN had to buy the dollars and recycle that dollars back in. Unless you have a big global shock, right? I'm not as pessimistic as you are on the capacity of the CBN to smooth out the exit of investors who may want to leave.
Okay. Yeah.
Remember, like swaps are swaps are maturing with the CBN, and they are not even rolling it over. Banks are filled with dollars. One of the reasons why your parallel market and your
Because
official
banks
market
are
has
awash with
converged.
dollars as well.
Banks are washed with dollars.
It was in an Nairametrics article today. You haven't read it.
I didn't read it.
You're playing golf.
Banks are awash with
It's my
dollars.
day off.
So a central bank that has the confidence to say your dollar has matured, come and take your dollars.
Yeah, okay.
All right, guys, we got to move. We've done 30
No, but I
minutes.
appreciate the back
But
and forth
it's been a
because
nice conversation
It's always
so
good
far.
to hear the other side because it makes you.
No, you sound very dogmatic with your view, right?
Very. I mean, I kind of feel like this will come back again, right?
No, I'm done.
At some point.
I'll let price action.
Next show.
Because
All
price
right,
action
guys,
has
we got-
proved Samson and it's.
We got to
a clap,
move. We got to
you know, but-
move. So we'll move straight up to local. During the week, the MBS released this much awaited inflation numbers for the month of January, and to the surprise of a lot of people, except maybe the MBS, inflation numbers suddenly just traded downwards to 24.48% in January. Of course, that was due to the rebasing. The central bank, the MBS, I beg your pardon, chose 2024 as its base year. And if you all recall, sometime late last year, they did explain that they were rebasing CPI and they were going to choose 2024 as base year. And they're also going to rebase GDP numbers, by the way, even though they chose 2019 as base year for GDP. So 2024 base year for inflation numbers 24.48%. A lot of controversies around this, guys. Arnold, I don't know, what's your take on these inflation numbers? Does it mean anything to you?
Oh, man, it's hard. It's difficult.
Are you very question the entire setup?
Yeah, I
Or
mean,
what it means for some of what we've achieved so far.
Yeah, but so my knee jerk is garbage in, garbage out, right? Statistics, right? What does it mean? Literally that. They took the basket of 700 items or so and added another 200 plus or 200 items. They reduced a few things, and which I'm not sure if anybody read the paper. The paper, it's actually it gave a good reason for saying that it's mirroring or reflecting the consumer change or the change in the Nigerian consumer. Some things make sense to me. Increase in restaurants and accommodation, around 1% to 12% or so, and then reduced food inflation, which is one of the heaviest things, which is one of the biggest sticky inflationary lines in our index. I'm still trying to get my head around it. That's the honest truth. I'm still trying to find out what it means, because when you look at the rebase, when the rebase came out, as soon as the rebase came out, you had market action, right? You had bonds start rallying because I talk about the 10-year Nigerian bond that was at 22.6. It rallied last week, and that rally means a lot of investors bought it, and then investors started selling it. And then when the rebase number came out yesterday or 2 days ago, you saw the markets reacting to this rebase number. On the one hand, one might argue it's liquidity, but on the other hand, does the market actually believe this rebase number? Is this where inflation is? And this is what I'm trying to get my head around, right? So whether I like it or not, this is the inflation number. And whether I like it or not, the market is acting like this is the inflation number. So whether I go into we talked about this, if an index starts in December, it's 100. If you look at it in January, that's a 10% increase in month-to-month. That's a month-to-month increase in inflation, right?
But
we know that
not
rebase
necessarily
doesn't
correct,
mean
though,
we,
but I mean-
we know that rebase isn't the rebasing the number lower doesn't mean it's inflation. But from market action, it's looking like the market is interpreting it as disinflation. So do you just follow the money and go with it? So that's where, when I look at these numbers, I try to look at, okay, how is the market taking it and what do I do?
Sam, is that market interpretation? Is that your own interpretation?
Contrary to what you might believe, I haven't formally studied economics, right?
We haven't. We haven't, so cheers to that.
So a lot of the mathematics that goes into constructing the composite index sort of flies off my head. However, I will say a couple of things.
Okay.
I think undergoing the rebasing exercise in the middle of trying to achieve credibility
Yeah.
In our
and
reform
macro
process.
stability, right, detracts from in my opinion, what I think is good work that.
But Sam, we're overdue reform. We haven't had
No.
we're overdue rebase.
So I don't.
We haven't had a
dis-
rebasis.
I don't dispute the process and the need for a rebase. I just would have preferred that it
different
happened
base year?
in a period, right, where the macro is a bit more stable.
What if they had chosen a
So
different base year?
there are two things. One, macro is a bit more stable, and number two, we need to be able to draw conclusions on, because remember, inflation is your rate of price change.
Yeah.
Right. Your direction of your inflation is the second derivative of your price change, which is the rate at which your price is changing. Right. I need to know if the country is in an inflationary part or is a disinflationary part. I need time series, right? Both for the new and the old.
You can't have it now anyway.
Right. That basically gives me a sense of the direction. So the reason why I think this may complicate policy making is, I mean, I had the view that just base effect alone, right, was likely going to force the exit rates based on the old numbers to around 26, 27%. And that is before you start to include the benefits that we are getting from the pass-through effects from the positive exchange rates, right? So, and that is a massive deceleration in inflation, which would have, in my opinion, at some point this year, catalyzed an easing cycle, right? Now, with this new base, remember this, statistics, you can make any number what you want that number to be. You need to really understand the trend either side of the number to really understand what it means. So I didn't look at the number to say, oh, Nigeria is now at a 24% inflation. It's like the consequence of what you are measuring is at 24%. And I'm not one of those people that think it's a manipulation, right? What I want is, if you're measuring that 24%, tell me how that 24% have behaved over the last 12 months and what it is like going forward, right? And if you now start and remember, when you go through a spike, right, in inflationary cycle and you get some sort of macro stability afterwards, you go into a rapid disinflation situation, which is why when you look at Ghana or you look at Turkey, the speed which they went from like 50% plus inflation was very, very fast. Yeah. With this new rebasing and the base year that you've now chosen, you might find that what happens is that it might actually delay your easing trajectory faster as you have you not adopted. It would actually delay your easing trajectory faster
If you had not
adopted it.
changed.
Yeah.
So I think that is the complication that policymakers have to contend with. I don't really buy this idea that, oh my God, inflation is now 34%, cut rates.
Yeah.
Economic reality is economic reality, right? And markets always see through these things. It is why the banks who do funny things with their books, the market will put it on 0.2 times, 0.3 times, because you can't fool the market sometimes, but you can't fool the market all the time, right? Eventually it catches up with you. So I'm not saying that they are trying to fool the market, but I do think that if I was an MPC member, this has definitely complicated how I think about policy action. And also, I think it is likely to also affect the speed at which inflation probably decelerates.
And I agree. One thing I agree with you, Samson, is I guess in school they call it smoothing the line.
Yeah.
They should have smoothed the line in terms of rebasing, so showing a historical.
So I kind of think it's the base year that's the problem.
How so?
Could have been, because I mean, if they had chosen 2019, I'm not sure.
So
I think
2019 would have been as close to current
correct
trend as
than
possible.
2024.
And then you get that massive, because I feel like there's a risk that we won't enjoy that massive disinflationary read, right? That the old data would have shown.
Yeah, exactly.
Right? And then you have a situation where market participants who are already quite skeptical to begin with.
Yeah.
Now, when you start easing, they're like, it's doctor
It's as if they were in a hurry to basically just disinflate.
But then that's also why MPC didn't actually ease. Right? Because they couldn't.
So that's segueing into MPC now.
No,
I guess that's another conversation.
No. I applauded the professionalism of the MPC in terms of how they responded.
I actually thought they were cut
to
rates.
that.
Yeah, you said it last
right?
week. I don't know how. Why?
Because the problem is, it's not even about, and this is the issue, because it's not even about the data anymore. It's now about the perception of credibility. And
But is that what CBN should be worried about?
Cardoso and his team has done a good job at restoring credibility. That sometimes when I speak to some of my ex-clients, they tell me that CBN is probably one of the most professional banks in EM today.
Whoa.
Right.
That's a big statement.
Those are big statements to make. So you've gone through this process, and he sees investors all the time. He speaks to them all the time. And what he's saying is that we are going back to orthodoxy. And
we are in orthodoxy already.
Well, we don't have a clear inflation targeting framework that has been articulated yet. But I think they want to achieve stability.
I mean, the president has said 15% anyway, but I mean...
it's not the president that should give us that, right?
I mean,
he's told you 15%.
It's not inflation that the president should... So the point is, I think they are on the path to policy orthodoxy. There's been a hard-fought battle to regain credibility in the CBN as an institution. And at the point where people have now bought into that narrative, if he had acted, even if the data demanded that he should, I'm assuming the data did, it raises question marks on
100%.
that. Right? So I think it's...
Question mark on the MBS data.
On the CBN.
On the CBN's policy independence, right? Which is very, very important,
100%.
right? Yeah. Because obviously the fiscal side can want whatever they like, but the CBN has to remain focused on price stability, right? And I'm hoping that they can watch this new data and maybe construct the old data to kind of see the trend, right? And are able to articulate.
So how are they going to see trend, or are they going to plot their own data? Or?
Well, I mean, the CBN probably hire some of the smartest econometricians in the whole of Nigeria. So I'm sure they have this data.
I think the NBS can actually do, because they know what they put into the data, right? So they should be able to easily just plot it backwards to actually show. You know,
I thought they were going to release both data together.
Yeah.
And then over time, you phase out the old one, and then you start to use the new one.
I was asking this question. You've been EM. And I was trying to figure out the same. What's the common practices? other countries that have rebased inflation, countries that have rebased GDP, countries that have rebased inflation. I think I was asking you about India, but you corrected me. I thought India in 2015 rebased inflation, but you corrected me.
I think
that
it was GDP.
It was GDP.
Yeah.
South Africa maybe in 2017. What is the common practice for other countries that have rebased inflation? From your EM experience, I haven't seen this before. I don't think I have.
So I mean, this is I have to go and double check because I don't want to say something I'm not certain of.
Okay.
But I find it very difficult that you can sunset the old data.
No, but you can't.
And then just suddenly say
you
this
can't.
is
Just start adopting a new one.
Yeah,
But they
you
did that.
can't.
They did that
It's
with
smoothing.
unemployment data as well. Basically, just sunset the old one and just all of a sudden we have 4%.
But again, this then complicates policy decision making
Exactly.
and
And planning as well.
And it then because obviously the reason why MBS exists is to provide data so that policy decisions can be made based off that data, right? But now you confuse policymakers, right? Because what are you measuring? How are you measuring
Exactly.
it, right? What are the trend within those data? So like inflation, certain aspects of inflation can be 34%, other aspects of inflation can be 24%. It depends on what you are measuring and how you are measuring it.
Yeah.
But, so I don't care about that. I care about the second derivative of the inflation, which is basically the rate of change of inflation. Is inflation going higher or is inflation going lower?
The derivative, yeah.
Right, and that's what is going to determine policy action in terms of kickstarting.
So
an
why
easing cycle.
weren't we this worried when the MBS came up with this funny unemployment numbers? Because I mean, I think from a central bank perspective as well, unemployment is also one of its
I think first of all,
policy objectives.
we were under a central bank regime that didn't even care about these things. Right, because MBS was just producing data, but it was a meaningless number. We have now, so one of the beauties of orthodoxy is that as investors and markets,
You look at economics.
you are able to predict decision function of policymakers, and that's how you make or lose money, whether you're right or wrong, right? Under the past regime, inflation could be whatever it is, and interest rates could be whatever it is, and unemployment could be whatever it is. I mean, I have reservation in terms of how you computed the 4% unemployment within the context of Nigeria, and it just looks like we've just copied and pasted global best practice, and without fitting it into the realities of what it means in Nigeria to be employed, right? And then we've published the number. So mechanically, statistically, it's right? But the reality...
In terms of the context.
Exactly.
Of the country that
And that's why I get worried. Shouldn't the central bank be worried? Because I never see the central bank mention unemployment numbers or unemployment data. I never see them mention.
I think very few.
And that is really something that the central bank should be looking at.
look people in the eyes and tell you that, and tell investors that Nigeria has a 4% unemployment rate?
With 90% of the so-called employed people essentially informal.
Yeah.
But I mean, this has got to play a major role in policy making from a CBN point of view as well, in trying to, because CBN definitely would always want to anchor interest rates, right? And at the same time, anchor interest rates to bring down inflation or to manage inflation.
Yeah.
And then also pursue, policy decisions that would help improve employment.
Yeah. But one thing I want to throw a question
now
back to you.
now we're
I want to
having-
throw a question back to you because
Okay.
you've asked both Samson and I our views on the rebase.
Yeah.
But we haven't actually heard yours.
Like, you're the rebase.
I want to hear you on the rebase. Is
mean-
it garbage in, garbage out? Are you worried about it? Are you concerned?
I think
Is it
I think statistically, like I mentioned, before we started shooting,
Yeah.
it's correct. You have to rebase. Last time we rebased was 2009.
okay?
So we've lost, and you're meant to rebase at least, I think, every 5 years or thereabouts. So
Okay.
we probably should have rebased in 2014, 2019, and then now probably the next best time to rebase. So from that point of view, yes. But at the end of the day, what base year did you choose? That's where I think the problem is. So they decided to choose 2014 and 2024, I beg your pardon. So if you use 2024, even realistically, as you and I, what we buy today, if you look at the price differential, forget about the statistics of CPI and the basket and all of that. Just look at absolutely what you absolutely buy last year compared to January. the price differential actually isn't that much.
Just the DYDX, right? The
Exactly,
rate of change.
just basically divide the X. That's why I actually at some point when they started the rebasing, I think some pundits thought we're probably going to see maybe single digit inflation. That's what some pundits thought.
Yeah.
So, I mean, a lot of people thought that we're probably going to see single digit inflation with the kind of rebasing that they've done. That was it was wild at that time, but so I wasn't really surprised that we've seen 24 percent inflation number. So from the point of view of where they rebase to, that's 2024.
Yeah.
Statistically, I think it's correct. But from the point of view of impact on policy making and perception from the regular people, ordinary people on the streets, because nobody's going to want to compare prices now to prices last year and see it as some kind of improvement or some kind of deceleration.
Yeah.
You would always want to compare prices now to prices in 2023 or 2022.
Yeah.
Right? And then see whether you're actually seeing not just deceleration on prices, but also acceleration in your income. Because at the end of the day, that's really the sort of convergence that you're looking for. And so, I mean, that will be my own take. But anyway, back to MPC.
Okay.
So, NPR 27.5%, everything flat. Didn't you guys think that they probably should have, played around with that symmetric corridor? Maybe reduce, maybe plus.
I thought about that
because I kind of thought at least let's just have it maybe like plus 300. Come on, because already now what you're basically saying is that so banks would have to borrow from the CBN at 32%, and obviously lend at maybe 38-39%, right?
Yeah.
And then so mind you have interest rates at 19%, maybe effective yield 22% short term, right?
Yeah.
So why would a bank want to buy Omo bills or T-bills as against probably just giving that money to the central bank at 26.75%? Exactly. So isn't there a disconnect there? And that's why what I really don't understand.
26.75 you kind of is an overnight rate, right? So you're not locking in that rate. That rate can be anything the following. Well, it is. I hear your point. There is. I'm worried about this. There is a bit of bifurcation in the short-term interest rate market. There is a disconnect between MPC, NTB, and OMO. Right?
Exactly.
And it's giving me scary thoughts of Godwin Emefiele's time, right? Where we had this kind of multiple market system and you start arbitraging the different parts. Yeah. I think obviously the CBN has to deal with the liquidity challenges that it has within the context of, remember, there was 10 trillion of NTB that was issued last year. And I think another 15 trillion of OMO that was issued last year. A lot of those are maturing with interest burdens on them. And so far, the DMO is clearly, from my perspective, trying to optimize what the cost of its borrowing 100%. Is, which it should.
Yeah.
But however, and so the issuance calendar for the DMO is a lot smaller than the rollovers, the maturities that are coming through.
Yeah, coming through.
So if you look at February, I think there's about 2.2 trillion of maturities in NTB, and then another 400 billion of coupons. And in March, I think it's another 2 trillion plus of maturities. This is before you include FARC, right? This is before you include FBI, right? So there's a wall of liquidity. And obviously FBI, even though you have local liquidity conditions which may be tight, FBI, from my understanding, sits in Vostro's account, and that doesn't count towards liquidity. So it's why you are going into auctions thinking that liquidity conditions are tight. And but then when all of a sudden
you just
the subscription is just like,
where's all this
money come from? So my point is, CBN needs to relink the short-term interest rates market. And we've had a lot of debates in our team around, okay, how do they do that, right? I think, obviously, the cost of sterilization is high, right? And so OMO issuance has to be more aggressive than it currently is, in my opinion. I have a rather controversial view in the sense that
When you say Omo issuance should
yeah.
be more aggressive, how do you mean?
So we should
mean
ensure that
in
whatever
price?
NTB is not
NTB, that's
getting
It matches
Treasury bills.
treasury bills,
It matches.
that whatever NTB is not getting rolled over by DMO, CBN should take it. Keep liquidity conditions
Whatever
very
NTB
tight.
is not taken over by DMO, CBN.
The challenge with that, however, is that remember, pension funds and local asset managers are not allowed to purchase OMO bills.
Yeah, but because Omo has
So,
become.
but then isn't that arbitrage opportunity? Sorry, I beg your
So
pardon.
what I'm trying to say is you need to create a situation whereby, because both assets are quote unquote the same financial instruments, right?
Yeah.
So an arbitrage opportunity exists when you have two assets with the same payoff that trades at a different price, right?
Which is Omo and NTB.
Which is OMO and NTB.
So you're saying, in a
So
sense,
so
collapse.
you need to collapse that
You
spread.
need to collapse that spread,
Yeah.
100%.
And you could
the
collapse that
spreads are
spread.
pretty close anyway.
the
yeah.
No,
problem
they are
with that is-
not.
but the
They're
problem
like
with that-
I think I don't know what the on the run OMO is, but the last time I checked, there were about 480 to 500 basis
But the problem
points.
with that is
That's
almost
huge.
been used
Yeah.
as a tool to attract FPI, right? So they've kept that up there. Almost supposed to be, I guess, a tool to collect liquidity, whether it's move M2 or M3 from the markets and just reduce
It's
liquidity.
open market operations,
Exactly.
right? Yeah.
But it's become a tool the CBN uses to attract foreign investors. So
I get
that
it.
spread had to.
Yeah, but then the question is, I'm not a. So if we say we are, I think for policy consistency, right? Your short-term interest rates, right, needs to the economy, the entire economy needs to operate within the same bands of your short-term interest rates. I'm not a fan of having one rate for foreign investors
Yeah,
and having one rate for
100%,
local
100%,
investors.
100%,
Right?
100%.
So
I
that's
agree.
why I mean, foreign investors should actually not even be buying OMO in the first place.
Yeah,
OMO,
I agree.
OMO
Omo,
should,
that whole
instrument
process was an
between-
Emefiele creation
Yeah.
anyway.
No, it started
but-
with
but-
Sanusi,
or-
and then
yeah, but
Emefiele
put
took it to a
into
different
overdrive,
level.
Then
right?
Cardoso is also running with it.
Yeah.
But
You know?
you don't blame him, because the problem is that there's just been so much liquidity creation. Remember, Emefiele printed, so not only FAC, and you know the way we recycle our. I think this comes at the heart of our FX challenges, which is how does Nigeria recycle the petrodollars that it receives, right? Because when money comes in dollars into FAC, for example, even
given
if the
Naira.
if the CBN gives Naira, which it sort of prints, quote unquote, even if the CBN then goes back to the banking system to sterilize, because of the way the fractional reserve banking system works, the gap that exists between the point of printing and the point of sterilization will multiply the value of that Naira that gets created. So that is why if you look at money supply, despite what is a tight monetary
We're
environment,
still seeing it
it's
gallop.
still
Yeah.
galloping, because we haven't finally tightened how we create Naira when we recycle dollar revenues.
So do you kind of think that's how to solve this money supply issue?
Honestly, I have a controversial view, and I know people are going to scream.
Let's hear it.
I think
You like to hear it.
No,
I think FAC dollar that comes into the system should be paid to the arms of government in that currency.
That's not controversial. There's a lot of people that have been advocating for that for years.
I didn't know that.
Yeah. People have been advocating for that.
Yeah.
People have been
Because
advocating
then
for that.
you don't create this.
But then aren't they still going to anyway? But I get that.
So the
argument
point is,
anyways. Yeah.
so
they don't. You don't print.
dollar sale
Yeah.
should automatically tighten Naira liquidity.
Yeah.
Yeah.
So just to explain to you guys, so essentially the impression is that anytime we receive dollar sales from maybe crude oil exports and it goes to the CBN, let's say you get $1, right, from crude oil exports, then the CBN quote and unquote prints 1,500 Naira in equivalent. Right, that's basically how it works. And so the whole idea is that just creates unnecessary liquidity, and then essentially at the end of the day drives the money supply and to a large extent inflation.
So that's one, right? So that's huge, right? So I think like one of the things I've always said is just pay these dollars to the governor, because think about it, their obligations are Naira mainly.
yeah,
Anyway, So even if some people argue that, the governors will go and buy the dollars, they won't buy all the, because they need to pay salaries. In order to pay that salary, they need to come to the official market. If they come to the official market,
That's
they will
liquidity.
take, that's liquidity there that they withdraw.
And they suck Naira.
Right? They'll
Yeah.
suck Naira out of the
Yeah,
system.
yeah.
Right? And you don't have that money, basically money-making machine that comes out of this fractional reserve money creation that happens. Even if the intent of the CBN is to sterilize, if you don't sterilize at the point of creation, you are having this problem because of the way fractional reserve banking works. Right? So you need to solve that. Obviously, there's also been the insane amount of ways and means money printing that happened under Emefiele.
Yeah.
So the biggest challenge that Cardoso and his team have is that we've created far more liquidity than this economy needs.
In the past or during his tenure?
No, in
or
the past.
combined?
In the past.
In the past.
But
Okay.
the problem
But now it's
is
the problem.
that that's the challenge
it's the
that we
problem
are
now.
now facing. So you now have a situation whereby this liquidity challenges policy decision making, which is why you kept rate on hold at 37.5, but your 1 year rate is at 18.4.
Yeah.
All right, guys, let's we're almost rounding up, but I just want to touch on something else. And it's related as well. And that is, central bank policies, central bank's decision to keep rates at 27.5%, and what manufacturers and people who actually rely on credit to drive them from. Now, there's a larger picture here. The expectation is that consumer credit at some point should drive this economy. Okay? Even Tinubu himself is big on consumer credit.
I like the fact you said at some point.
Yeah, because it is what it is.
Very soon. Very soon.
At some point.
Should drive this economy. So, and that's why I want to hear your views, though. I want to hear your views. So, I mean,
So in what
so
sense?
do you think that interest rates should stay, elevated as it is, while output continues to be depressed because manufacturers and people who need finance, who need credit to actually produce, can't access that credit at this sort of rates? So where does this end?
Well, that's one of the reasons why they didn't cut. Sorry, they didn't raise, right? Because if you raise, you're actually going to
So you
squeeze
think
these
cut
guys out.
is positive?
No. So
I mean, keeping it stable is positive. It's as good as
yes,
as good as cut.
Yeah, as good as cutting. It's. I mean, they couldn't raise because of that squeeze, right? Because of that squeeze of the consumer, because of that squeeze of the.
But I mean, so
consumer credit,
this
the
rates
squeeze of
now
the people that
essentially
need
is
it.
going to remain for 6 months because it's been like this since November.
Until May, right? May is the
Yeah, so that's basically 6 months.
which
6
is
months.
fair because then it gives them time.
So
also
27.5% for
to
6
view-
more months?
It gives them time to actually view this inflation that we've been talking about. It gives them time to actually see whether this thing is working, right? Samson has a different perspective, but I think that 6 months is enough. Gives them enough time to actually see what's actually happening, whether this inflation is kicking in, whether this rebase makes sense or not.
At what point will manufacturers see lower interest rates?
I have a question.
Okay.
When you look at the economy in aggregate, I don't want to speak to individual manufacturers because that complicates the conversation. The stock of credit relative to total output in Nigeria is very small.
Yeah.
And that credit,
That's if you believe the
that
dollar. If
credit,
you
that
believe the
credit-
so-called total output, but let's go on.
That's another argument.
And that
It's
credit,
very small.
and that credit is highly concentrated, right?
Yeah.
Big
Oil and
guys,
gas.
Who are the guys
corporates.
who are really borrowing?
Yeah.
Is the government
Yeah.
and large corporations. And when you look at the number of people that large corporations employ and the impact that those people have on aggregate consumption, credit as a variable to aggregate output is nowhere, in my opinion, as significant than exchange rates.
What's the correlation?
So the point I'm making is interest rate is a form of price.
So you're saying
Exchange
banking
rate
lending
is a
doesn't-
form of price.
Yeah.
Now, as a policymaker, you have a choice. Which price do you want to
focus
adjust and do you want to focus on?
Okay, so your point is
Within
focus
the
on exchange
context
rates.
of Nigeria
FX is more
and the
important than
impact on
credits.
what it means for the people who are creating output, FX is so much more important than interest rates.
You
That's
agree,
a
though. But you
wild
have to agree.
view,
No, but
man.
you have to agree.
I mean, it kind of makes
Ugojo,
sense.
you have to agree. You have to agree.
I
You
wouldn't
have
say
to
I totally agree, but
Yeah, no, but
I
you
mean,
have
but
to
I
agree.
mean, for the manufacturers who are watching, do you agree with that?
That's why I wanted to have an aggregate level conversation. Because if you start to single out individual manufacturers,
Then
of
it's-
course
yeah.
things are difficult.
Yeah.
Okay, but Sam, so fine. So let's look at it generally. I talked about consumer credit. Again, we do need GDP numbers to grow. You said it already. You can't continue to rely on FPIs for that exchange rate predictability that we are looking for, not necessarily stability. So you need to at some point also stimulate local exports. So maybe let's avoid using the word production. Exports.
Yeah.
Okay. So now, how do you achieve that with elevated interest rates? How do businesses actually ship out inventory? How do they increase revenues so that they can make profits and then you can buy equities? How does that work? What's the interplay? And that's because at the end of the day, this still boils down to real businesses. So let's come down to real businesses. So what does this mean for real businesses? Forget about trade. What about real business? What
I
does
think
it
I
mean for
have,
them?
I have a question to go. It's a question of what do you want, right? Do you want to have high cost of borrowing today
Okay.
that increases the probability that your cost of borrowing in the future is going to be low? Or do you want to have a low cost of borrowing
And gives it
and
all
then
a certainty that
and
at some
then you
point have
continue to have
Of course, I wanna-
exchange rate
of course,
progression.
the
Because,
former-
I think people misunderstand. So, for example, like when the Naira moved from 900 to 1,007, that is almost from the perspective of businesses, especially import-oriented businesses. That's almost like
Suicide.
raising interest rates by 50%.
Yeah.
Right? So we kind of need to look at like there are different measures of pricing in the economy.
Yeah,
right?
Samson, I'm actually buying into this.
Well, I
I'm
know
buying
you
into-
buy into
I'm-
it.
No, I'm buying.
Of course you would buy into it.
No, sorry, Samson.
So
Sorry to cut you
I
off,
hear
yeah.
your point. Is that the
Yeah.
problem is again, like we are all right. I'm not saying that Ugojo is wrong. I'm just saying that
What's more important?
how do we at this point in time?
Yes, yes.
Okay,
What's more
What is
important?
What's the
important?
balance
Yes.
then?
What's more important? For me, the priority, number one, is that let's have exchange rate stability. Let's go into a disinflationary cycle. The CBN will start to ease, cost of borrowing will drop,
Simple.
valuations will go up, multiples will expand, and the ease to be able to borrow and fund your investments would improve.
At what point will this happen from your own point of view?
If Oga Trump doesn't scatter things for us, right? And and we don't have significant policy error, I think we will start to see significant level of disinflation towards the back end of this year. And I think 2026, 2027, we should start to see that investment flywheel, right? That gets catalyzed by falling cost of capital. And remember, also, the businesses that survive this environment have deepened their economic moat so much. And this is speaking as an equity investor. And the value that these businesses are going to generate when their cost of capital starts to fall will be very, very significant.
No.
All right, on that note, we'll move to the last thing because we're basically out of time. Let's just move to something softer now. So,
Okay.
we're talking, something softer. We always have to talk to softer things of life. So, Arnold, I mean, you're on vacation.
What vacation? Am I allowed a vacation?
Are you taking a lot of vacation? Yeah, I just want to ask
Okay.
you guys. So someone asked me once, like, you
Yeah.
guys on Drinks and Mics, and you
Yeah.
guys who always do business, how do you guys rest?
Yeah,
Like, how do you meditate? How do you think?
So it's an interesting one actually. I was having this conversation with someone last night because I'm on leave at the moment, right? So,
leave.
so when you, I'll speak personally and also related to Samsung because when you work in the city in London, right, there's this guilt when you have to go on leave, right? I work for a hedge fund and we called us an African niche, and we obviously had to make money trading and buying and selling Africa-focused stocks. And at some points, we wanted to make more, so I started trading Egypt. But Egypt's Sunday is our Monday.
Yeah.
So then I worked for years. I worked for 6 days. Saturday was my weekend. And because you want to get the performance fee that comes at the end, and so you're working. So my Sunday was a weekday for me naturally. So you sort of take that as you grow into your career. you sort of take that mentality of not taking days off, not going on leave. And if you're sick in the hospital, when my son was born, I was in a hospital with him in one hand, and I was looking at markets on the other hand.
Wow.
In the
Does he
hospital
know
with
this,
him.
by the way?
He knows now. But it's your mentality to work. And then I called Samson a few months ago. I'm not sure if you remember. And I wanted to talk about something. Samson said, Arnold, I'm on leave, and I make it a point not to talk about work when I'm on leave. And I thought, oh, hold on a minute. I've never heard that concept before. And it changed. It's sort of affected me in a very positive way. So this week I've had some time off. I've done some work on my days off, but there are days when I'm playing golf and my phone is on the golf carts. I'm not listening. And it's been extremely helpful. And we spoke about, and I sort of draw a bit of inspiration from reading about Bill Gates and Michael Jackson that go away for a week and weeks on end, and they just switch off, like the Socrates and the philosophers of back in the day. So there's something about switching off and thinking that helps. But there's something about vacation time that allows that thinking for new inspiration. So that's how I'm dealing with my leave. Is I'm giving myself
You're still
time
learning.
to think.
That's what it sounds like.
I'm learning.
You haven't
I'm trying
really
to figure it
gotten to
out.
that. You haven't-
But I'm
you don't really have a
learning, giving
formula
myself
yet.
time to think. Giving myself time to
Something, how
think.
do you,
So,
what's your own philosophy around taking a break?
I mean, this work is very consuming.
Yeah.
And for us, I'm sure I know than you, it's the same. It's a lifestyle, right?
Yeah.
It's not even, honestly, if I didn't get paid, I probably would do this work for free.
Yes.
Right.
Yeah.
It just so happens that luckily I'm in a field where the currency of success is measured on how much money you make for your unit holders and yourself, right? But that's how consuming it is. But by accident, I was on holiday and the screen of my phone got damaged. And so I didn't have access to the internet for 5 or 6 days. The clarity of thought that I had over that period was so good that I have now made it a point that 3 to 5 days in a year, I'm going to take a time out on my own, right? And just cut myself out of the rest of the world.
So 3 to 5 days.
Yeah.
5 days out of 365.
Yeah. And just have that clarity of thought. I tend to, I think we were speaking about
So you don't
this
talk to
off
your wife, nobody, just...
Maybe I would talk to my wife, but specific times, right?
Okay.
But ideally, I mean, my wife is probably the only person that I would speak to. Just focus on myself, self-reflect. It's almost similar to like when I'm flying, for example. That's also a period of deep reflection for me.
Yeah.
When I'm in the plane,
Yeah.
I sit down and I get to think. And these periods of just taking a step out of your hectic lifestyle gives you the sort of clarity that I think drives productivity. And it's something that I would encourage. So my idea of not working when I'm on holiday was born out of this accidental observation.
And then you realize
Because remember,
that,
we used to pride ourselves
how hard we worked.
we worked.
Yeah, worked so hard.
The more time you
100
put
hours.
in and all that.
Yeah, 100%.
But then
100%.
you just burn out.
You burn out. And we've
it's-
seen a lot of
and it-
colleagues
and it-
burn out.
And it
Yeah,
stops
yeah.
being fun.
Yeah.
And the moment this job stops being fun for
Yeah.
you start to make stupid mistakes.
Definitely.
Right. So that's my own approach to. I want to do it more. If I
Yeah.
could take like a week, 2 weeks, I don't know if I will survive. But I really, as I get older, I
Yeah.
want to take quiet times away from the market, away from friends, and just reflect and think.
Yeah, because you find that those quiet times actually where you actually get the most inspired for new ideas.
Correct.
And
Yeah.
strategy.
Correct.
Yeah.
You know, those
Correct.
quiet times alone.
Correct.
It's
So I think for me though, what I do, I mean, more recently, I go on a vacation. So I have a friend who is always willing to have me over. I mean,
Okay.
he basically say, "Hey, dude, it's time for you to come
okay.
over," and then I basically, somewhere in the UK, and I go there and I spend like a whole week in his house, and
Okay.
basically,
And you isolate yourself.
isolate a lot of
Nice.
food.
Oh, lovely.
And I'm not someone who likes to watch TV a lot.
Okay.
So basically just food, sleep, wake up,
Yeah.
and then eat, sleep, wake
Yeah.
up.
Yeah.
I mean, but I still find it difficult to, not to use my phone. I just
Okay.
always
It's
have
very,
this-
it's very hard.
Very
It's
hard.
very hard.
Okay, very
It's
hard.
very hard.
So, but
It's
the thing
very
is
hard.
that I probably
It's an
don't-
addiction.
Yeah,
right?
don't
Yeah, it's
walk
an
We're all
addiction, yeah,
addicted.
But when I
yeah.
come back, I'm pumped up.
Yeah,
Like
okay.
pumped up and of course very refreshed and all that.
But you know what's interesting for me lately is so I try to find small pockets in the day. And normally, I enjoy reading, but my reading has always been, if I'm reading autobiography, is something on George Soros, or I'm reading the new John Mack, the Morgan Stanley CEO. But now I'm reading fiction. I'm reading American Psycho, and I'm finding I'm reading these storybooks because I've never really been a storybook guy. I'm reading about emerging markets or market guys or how Stan Druckenmiller broke the Bank of England but now I'm reading storybooks. I'm really finding that just reading something. Well, I mean, American Psycho is still based on an investment banker in the 80s.
Yeah.
But for me, it's a storybook.
Yeah.
It's a storybook, finding little pockets. So I force myself 30 minutes to 45 minutes of reading a storybook a day. I force myself. So 9:30, 10 p.m., I'm reading a storybook. So I find that helps.
Interesting.
All right, guys, we got to close
Okay.
with our usual buy, sell, or hold. I mean,
What are we buying? What are we selling? What are we holding?
so buy, sell, or hold. So buy, sell, or hold Nigerian equities amidst lower, treasury
Yeah,
bill
I mean-
yield.
Yeah.
CBN interest rates at 27.5%.
Okay.
Are you going to be buying?
Yeah,
Nigerian
I think
equities, or
I
is it
think-
time to sell?
No. Well, it depends on where you are, but I think that this is the time to Nigerian equities, man. If you're not in Nigerian equities, then where are you? Yeah, Nigerian equities.
Sam,
Some-
do you
some
feel
good-
this way?
Yeah.
Same optimism.
Yes.
sell, or hold? Nigerian equities?
Big buy.
Big buy.
Yeah, big buy.
Big buy.
I'm probably the most bullish on Nigerian equity story.
And you've been for a while.
I have been, and
You've been for a while.
Yeah,
You've been for a while.
I've been since.
Yeah.
I know we are
beginning
running out
two-
of time though. When we say Nigerian equities, like, is it all sectors? Are there specific sectors that you guys are probably?
I mean,
looking
my
at?
approach to I go for category leaders, so businesses that I feel like are relatively well run.
Top in the sector.
I top in the sector. I run a very concentrated portfolio, so my equity book is probably about 10 stocks, right?
Wow, that's concentrated.
there's a sector that you like
super-
that
Is that Nigerian? Your Nigerian book or
my,
general?
my Nigerian
Okay.
book. Yeah. Even globally, I run very concentrated risk, right? And I'm very fundamentally driven in my equity investment style. So I tend to want to know the companies that I invest in
Okay.
inside out,
Yeah.
and I can't do that for everyone. So I pick and choose the ones that I want to. But the point I wanted to make is, so obviously in EM return clusters, right? You have period of exceptional return and then you have period of exceptional losses. And I think Nigeria is kind of at the corpse of probably a potential period of exceptional return in the equity market.
Yep.
Because when I look at obviously I'm heavy in the banks, right? And I think the consumer companies are starting to look interesting because they are trading at fractions of their
Yeah,
replacement costs.
replacement costs, yeah.
Fractions of
Yeah.
their replacement costs. And remember, there's this concept of operating leverage, right? That people underestimate in a recovery cycle. Because what tends to happen during difficult times is that companies downsize, streamline, cut the thing to the bone,
Yeah, and I'm more efficient.
and are more efficient.
Yeah.
And usually, because we've been through very difficult time over an extended period, there's a lot of excess capacity in the economy, right? So when you start that recovery process, what happens is that margins explode,
Yeah, the upsides are.
right?
Yeah.
And your need to invest, because you are still uncertain, so your need to invest, that cash flow is lower. So your capex is smaller at the point where your capital generation is highest.
Yeah.
And that tends to be really, really good
So you
period
get
for
that
equity
cool-
returns.
Yeah.
All right.
buy
Last
equity.
last buy, sell, or hold. Because I mean, I actually thought we were going to have this on that an hour, but I think
Because I was about to
blasted
talk-
past an
I
hour.
was about to challenge Samson.
No
I
more
need to-
challenges.
let me just put
We're
it out there.
done.
Let me respond.
No more
There's a
challenges.
sector that I
Buy,
love that he
sell,
doesn't
or
like,
hold.
palm oil. But
But
we can.
we'll talk about it after. Buy, Buy, sell, or
Can I
hold.
say something about that? Please.
Palm oil.
Please.
We can do this another hour, but yeah.
No, it won't
I'll
be
keep
an
quiet.
hour.
I'll keep
It
quiet.
won't
Let
be
you
an
go.
hour.
Then next
Palm
show.
oil.
Next show.
But we only got two
Next
stocks
show.
there, though.
Is there-
Tesco and Okowo.
Yeah.
But he.
So the only reason
Okay.
I used to be a shareholder in Okomu.
Yeah.
Right.
Yes.
So I know the industry. The challenge. So
I got it to Okomo at 35 Naira, by the way. Anyway,
I
Listen,
46, I did
Okomo-
at 46.
Okomo-
Yeah,
Okomo
I
has
did at
been a
36. I
good-
sold too early though, but I
Okomo
did.
has
I
been
still
a
have
good-
it. Oh wow.
Well
Okay,
done,
that's
well
really
done,
good. So the challenge. So that is a perfect stock to own when you think Naira is going to fall out of bed.
Okay.
Correct.
Then we can end the show there.
So you can see why. You can see why.
That's why I wanted to talk about it, because then it goes back into
All right, last buy, sell, or hold. No explanation. Just
Okay.
buy, sell, or hold.
Which-
US equities. Buy, sell, or hold.
I like US equities.
Buy, sell, or hold.
Buy.
Buy, sell, or hold US equities.
Sell. Yeah.
Buy, sell, or hold US equities for me. Buy.
Okay.
Buy, sell, or hold Nigerian stocks. Buy for me. Guys, this has been Drinks and Bikes. And of course, unfortunately, we had to do this past 1 hour. It was great having Arnold and Sam on the beat today. Tunji couldn't be around, of course, because he was out of town. But of course, we always do this every week on our YouTube channel. Look for us at Nairametrics. Of course, go in the comment section and then tell us what you think about today's episode. Anything else you want us to discuss on this show, let us know, and we will be discussing. Until we do this again next week. By the way, Sam's going to be coming once at least. We're going to drag Sam. Is a very busy guy. You guys are asking for Sam.
Wednesday.
He's a very busy guy.
Wednesday of the month.
He's
First
a
Wednesday of the
very
month.
busy guy. So we're going to drag him. We're going to have another amazing guest next week as well. Trust us. We're going to line up incredible people on this show so that we can break down markets for all of you. And of course, once we do this again next week, do have a profitable week ahead. And of course, guys, cheers.
Oh, cheers.
This is a good
Cheers.
session.
Bye, bro.